Howdy, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Wednesday, November 29th, 2023. As always, we'll start with our executive summary from today's leadoff morning note. As always, if you need the analysis supporting these conclusions, or if you want to know what to actually do about them in your portfolio, you need to be a client of 42 Macros. So let's start with number one. In the past 24 hours, we have received leading survey data from both the U.S. and the Eurozone that independently support a weaker dollar via improving global growth prospects. Number two, Goldilocks is not the highest probability bottom-up macro regime in either the U.S. and Eurozone economies over the next 3 to 6 months. So why have asset markets transitioned to pricing that in via the nascent Goldilocks top-down market regime? Our take on that is that Goldilocks can persist for a few months just due to an implied acceleration relative to consensus expectations of sharp decelerations in the U.S. and Eurozone economies over the next few quarters. And then lastly, number three, investor consensus is setting itself up to be surprised once again by the resilient U.S. economy theme we authored last summer. The Eurozone economy will have a harder time demonstrating resiliency, but growth expectations are so depressed that we may be on the precipice of a trend of positive economic surprises in the region. That has positive implications for the Euro-USD cross and by extension global liquidity. Refer to our November 21st and November 22nd leadoff morning notes for details. Transitioning to my 42 macro dashboard, we'll start with our rundown of long bow signals here. We got a deeply oversold signal in the 2-year nominal treasury yield as well. Our 2-year nominal treasury yield, we have a deeply oversold signal in the 10-year nominal treasury yield. We also have a oversold signal in the 10-year TIPS yield as well. So for those of you, I mean, obviously, if yields back up, you're probably going to see a bit of a pullback in stocks and some consternation and volatility across global asset markets. So probably not the best spot to be allocating assets and allocating risk here this morning. We also have an oversold signal here in the Shanghai Composite. Pretty narrow range, though. This has been a one hell of a downtrend. We told folks to get out of China back in February of this year, and that proved to be quite the call. In terms of the dramatic underperformance of Chinese equities and related assets throughout the year. Transitioning to our 42 macro aware community, we'll wrap up with a question from one of our subscribers here, asking asking me about my thoughts on our friend Rob Paul over at Real Vision, his take on liquidity, seeing uninterrupted acceleration in liquidity over the medium term. We definitely are seeing similar things in our process. Recall that our global liquidity proxy inflected to a positive trend last week. We have, dollar inflecting to a bearish trend, currency volatility inflected to a bearish trend. Move index broke down from bullish to a neutral trend. So all these things are contributing to a positive outlook for private sector liquidity creation over the medium term. In terms of the leading indicators for public sector liquidity vis-a-vis central banks and fiscal authorities, we have yet to see any meaningful change in sort of the condition of inflation and the condition of growth that would support significant expectations of a rising trend of central bank liquidity over the medium term. So don't forget, liquidity comes from two places, both the public sector and the private sector. The private sector is getting 2 thumbs up in terms of the outlook for liquidity, but it's unlikely that we see a material push higher in public sector liquidity over the medium term for most major economies, with the exception of China. So the net liquidity is headed higher, probably not headed higher in a very expeditious, sharp manner like we typically see when central banks are out there doing QE and other large-scale asset purchase programs. But certainly, it's a positive fundamental tailwind that investors are currently experiencing at the current juncture. So we'll wrap that up. Darius Dale presenting our macro minute for Wednesday, November 29th, 2023. Best of luck out there today, and have a great day. Catch you back here tomorrow. Cheers.